Hello, I'm Alan Capper of South South News. Trade and globalization are subjects that are constantly in the news. Trade is looked upon as one of the main elements in helping to alleviate poverty in developing nations. But how does it work? How can it be funded? How can it be managed? Well, we're very fortunate because today I'm talking to Kerstin Braun, who is the Executive Vice President of COFACE North America, the world's leading credit insurance company. Very nice to have you with us. What actually is trade credit insurance?
Trade credit insurance is a mean that supports trade between companies, either in one country or from one country to another. So it supports and protects the credit that you offer and extend to one of your buyers.
So you're facilitating trade, really?
Indeed, we do.
So you are serving both the, if you like, the purchaser and the sender.
Yeah. We are in between those two parties. The seller extends a credit to his buyer because the buyer can't pay at the day of delivery, and to make sure that this buyer pays at due date, we are there to monitor the solvability of the buyer, and then in case the buyer cannot pay, we pay to the seller, who himself then pays a little premium to us.
Okay. Well, how little is little?
It depends on the buyer's portfolio. So a seller normally extends credit to multiple of his buyers, and we protect all receivables that he has towards them. So we look at the buyer's situation. How strong are they? Will they be able to pay within a period of 12 months, yes or no? And so we assess all these risks, and based on this risk assessment, we determine the price.
Well, what would be the longest period that someone would have to wait for payment for goods sent from, say, Southern Africa to Western Europe?
Payment terms in Western Europe are normally short. So in the northern hemisphere of Europe, it's normally like 30 days. You extend credit for 30 days. The more south you go, the longer they are. It depends on the culture itself. So normally, like we would say, at a maximum 90 days. And that's the period where the seller is at risk. And this period is covered by us.
Well, let's take a practical example. Well, how large does a company have to be that's selling something outside its own borders and wants to use your services? How large do they have to be? There
is no size, or no company is too small for credit insurance. And if you think about it, the smaller company is, the lesser experienced they are with selling to a foreign country or a buyer who is outside their own country, their home country. So, and especially in that case, when you talk about export to another buyer outside your own country, you face a different legal system, you face a different culture, a different language. So then it's very helpful, especially in this situation, to have a credit insurer who then follows up with the buyer in case he doesn't pay in time, follow up, verify the receivables, and in the end help to collect the money again. So I would even say smaller companies are more at risk when they sell outside their own country than larger companies. Larger companies normally have a huge legal department, have huge risk management departments who can support them on managing this risk better than a small company who doesn't have that.
Well, okay, let's take a real example. I'm a manufacturer of copperware in Nigeria, and my business has grown. Many villages are contributing their work to our company, our enterprise, and people admire the products. We want to sell them in Western Europe, and we want to sell them particularly in France and Germany. How would that person in Nigeria running that business come to you, and what would the deal be?
We would look at the buyers that this company in Nigeria has. Maybe it's only one buyer, or maybe multiple buyers in various countries, as you said, Germany and France. So we assess these buyers at the beginning, at the time when our seller in Nigeria wants to extend credit. So we assess all these buyers. We have, as COFACE, normally have a huge database. We know more than 50 million companies worldwide. So we have a huge database on information of these buyers. So we assess the risk and then guarantee that the payment will be made at due date. In case there is a surprise, there is a next financial crisis, and these buyers in France and Germany cannot pay because they're insolvent or for whatever reason, then we step in and we pay our seller in Nigeria, who is our client.
How do you acquire all this information about all these companies? And these are large companies, medium-sized and small?
Yeah. You cannot start a credit insurance operation today and want to be strong in it tomorrow. We started more than 60 years ago, and we built up this huge database, which is of course IT driven. So all our risk underwriters, and we are present in almost 100 countries, all our risk underwriters have access to the same database. And in this database we store information, annual financial analysis of a company. In some countries we even get information from the bank of a buyer. We have payment experience, which is key factor and a huge information resource for us. And all these data together, like this bunch of information that we have on one buyer in France or Germany, this together will be funneled into one credit limit that we then grant to our seller in Nigeria. And it's a huge database, and it's updated on a daily basis. We have economists all over the world who gather this information, who feed the system on a daily basis, because this is key for our business to assess the risk right.
Do you think it's true to say that in any trade transaction there is an element of risk today?
Indeed. If you have trade and extend credit to a buyer that you might not know, there's a risk. And the other risk is you already sold to a buyer a couple of times, 10 years, he's your client already. You think you know this buyer, but there is a change at the buyer, and you have too much trust in a buyer. You wouldn't ever see that his situation is deteriorating. And there, it's always helpful to have a neutral second opinion who looks at this buyer from another angle, not very emotional, but very rational with our experience that we have, and give you an update on the buyer situation.
Right.
So anytime you extend a risk, you always should monitor the situation of your buyer.
So do you hold the money in escrow between seller and buyer? Is that how you actually function?
No, how we get funded ourselves is by the premium that our seller in Nigeria pays, and once the buyer, normally the buyer pays his seller. So the buyer in France and Germany would pay to Nigeria. In case they don't do, then we indemnify our seller in Nigeria.
Right. And globalization has caused a tremendous increase in trade generally, particularly from developing nations. Are you seeing that yourself?
Absolutely. That's how we grew ourselves. We started our international rollout like 15 years ago, because we live in a global world. Our clients went to other countries, so we follow our clients, and that's how we are now present almost in 100 countries.
So you're aware of the UN Millennium Goals, one of which is the alleviation of poverty. Do you believe that trade is a major factor in helping to bring that about?
Indeed, we strongly believe that this is the right way to do it. Trade brings wealth, creates wealth. wealth gives the opportunity to education and gives the opportunity to a self-determined life.
Right.
So absolutely, and we highly appreciate these efforts.